So with 4 straight red days, we are now possibly entering into the bearish market. Now, this sort of situation causes a lot of fears, especially now that we're dealing with a new administration, and this administration comes with a lot of wild cards. We've recently seen how Donald Trump's tweets can impact the market significantly. And in these situations, managing your trades, your account can be the most difficult thing that you can endure. Now, I've said this before and I'll say it again, but trading is 80% all about account management. If you can take the appropriate level of risks while maintaining profitability and taking wise decisions, you will do well. In today's market, we've seen a fast sell-off that would have definitely caused a lot of people to panic and buy puts or sell their shares. Now, when the market moves very fast, that causes premiums to spike and it becomes harder to trade in those situations. So in today's session, we're going to be talking about the trades we took, remaining patient in this type of market. We also want to inform that it's been a while since we last posted our market recap, and we have been doing fairly well, especially last week. And we want to continue to highlight that we'll be doing this market recap to educate you guys moving forward and also provide transparency in the trading room. So let's get straight into it. So today we've seen a massive dump right off the close. Now the funny thing about this is that S&P 500 has been pretty much moving in a very similar fashion to yesterday. Okay, so in our early report here, we spoke about that the market is going to be very choppy. Now, the definition of choppy is being up and down. Sideways is more of a limited range, but choppy can definitely be a significant range. You see here that we had given a bearish bias if S&P 500 gets below 59.70. So that's where the bearish gamma that you can see right over here. Right off in the open, you see that the S&P 500 breaks below our level 1 bearish and our level 2. The level 2 bearish pretty much confirms the trend for the downside, which tells you that every major pop will likely be sold off. Now, this is very important to note here because with this information, it helps you guide on the trades that you can take moving forward. Now, the way that we calculate the level 2 is through a proprietary method, but the way that we do it is based off on the concept where the market makers, basically there's two sides to a coin. When it comes to trading options, there's people that buy option premiums, right? So that's people that buy calls or puts, and there's people that sell premiums, which are market makers that sell the premium to get the guaranteed rate of return, but their losses could be infinite. So whenever this level 2 bearish hits, what happens here is that since people that write premiums, their losses could be infinite, what they tend to do is that they offload, i.e. cover their position, and they start to buy equity to ensure that they can make sure that they fulfill these obligations. So that tends to cause a trend either to the downside or the upside, depending on whatever level hits. And our level 3 is our reversal zone. So in today's session, we pretty much said our bottom is at 59.05, and that basically was 3 points away from today's bottom from what we see over here. Okay, so very interesting tell that you can see the market opened up here and then dumped all its weight here and pretty much chopped its way through. Now, the trades that we decided to take, we did very successful. So yesterday, we pretty much was bearish on Broadcom, and today we have taken various plays here. Okay, so yesterday I actually learned my lesson where I rushed into these S&P 500 puts and we got a strike that was far out. That caused the trade to make 40% on the downside, but it ended up going to zero eventually, because when you buy something too far out, especially in this market, and you overpay, you get screwed over. So we learned from our lesson here, and that's what trading is all about. So we didn't chase the puts right off the bat, but instead we looked for other opportunities elsewhere. And what we did here is we looked at Costco and we got the 1065 calls. Now, the reason we took for Costco is, first of all, this I didn't do any analysis on whatsoever. My assumption was pretty much based off on the fact of looking at this heat map here. So this heat map is very useful tool for traders to use, because the purpose of this heat map allows you to see what industries and what's moving the S&P 500. So you can see with Walmart ripping, and Walmart at this time was up around 2%. You can see that the money is being in the non-clinical consumer goods and services. So with that being said, we've seen Costco as a viable opportunity, and considering that the premiums were bullish, we decided to jump in, and that trade was a nice 60% for the team on a market that continued to sell off. We have then later decided to get ARM puts. The reason we got ARM puts here had to do with the fact that ARM basically hit my inflection point, right? We got it around right over here. It dumped to this point over here. Now at this point, this was up 60%, but because I have some profits and I wanted to swing this, I decided to hold it, because if this 134 breaks, which is our estimated weekly low, and it retests this again tomorrow, you could potentially see 128. So very nice to see that, because those puts we got at around 1.9, but they ended up at a high at around 2.7 during that time. So we sold the Costco puts. We still had our SMCI puts at this time, and that was pretty nice. We decided to sell SMCI. So this is one play getting a lot of hate on, and it's pretty funny because my analysis was right on the money here. So we actually shorted SMCI last week around here. We played two positions. This was the 50 put and the 55 put. Okay, we sold the 55 put, sorry, the 50 put, because it was further from the money and we had more capital. So we decided to sell that. Now the funny thing is that beginning of the month, we actually rolled the wave here where we actually had the 30 call that went 1,000%. So that's a different story. And then we rolled into the 40 and then kept rolling on until it started to really break out. So at this point over here, we called the top and said that the if they didn't have the 10K filing, they could break down. Now, interestingly enough, I basically this week, we managed to call out that SMCI that we've seen a bottom at around 45, our estimated weekly low. So that was prior to the report being released. You can see right over here, our estimated weekly low is at 45. We called this out on the 23rd, which is before the start of the week, and we sold it right over here. Okay, that was a 55 puts, banking 133%. Now, even though it's 130%, you got to realize that the IV on these premiums are insane. Okay, so there's no way that even if you take calls, like if people took the calls, they would have to buy literally the deadline date, because the 55 calls were going for around $5, and that's where they closed at. Now SMCI is at 56 pre-market, and they were pricing it around a 30% move. So if SMCI opens around here, those 55 calls that you bought for 5 will be worth 1. Okay, so very important here. And if SMCI moves to 50 or opens below 50, all sides are going to get crushed. Okay, so you want to note that do not celebrate immediately, because you would only make money if this rips to 60 or at least 66 moving forward. Okay, because it's going to be in this chop range over here, I am not so confident that SMCI will rip. It would have to move above 62 for you to make money. So the people that were making money is if they bought shares prior to this, if they have a cost basis lower, but otherwise this will be a hard play if you bought options. Okay, if you bought options that expire this week, they will be a hard play, because this is not up enough. You will get burned on the IV. Okay, and that's important to note here. Okay, so besides all that here, other stocks that we were watching, we've seen that Broadcom melted here. We had the 210 puts. We sold it yesterday at the close, but they managed to, go way above. You see that there's weakness in the chips right over there. We spoke about ARM, and we actually were bullish on Apple. So the thing about Apple here today is that Apple did it very well. Okay, so Apple had news that came out earlier today that basically mentioned that they increased their dividends. Okay, so with that Apple play, we see right off the bat it went more than 50%. I decided to hold that because I think that with Apple, you see the potential that it can get to 255 this week. So this hit more than 50. It went to around 60% or so. So we still want to hold it, but it dropped right at my level 1 bullish at 249.6. So if we see Apple take another shot at this inflection point tomorrow, then it's very possible it can get to this 252, and that's where things get interesting. But you see here that Apple is trading in a chop range and is respecting that boundary right there. And then now the next play that we've definitely take, we made 120% on SPX. Don't want to talk about that, but we took a bunch of other stuff as well. So that's pretty much it. We banked a Costco, SPX puts, ARM puts was also very successful trade, and overall we're doing well. And the reason for that is by having this analysis to help us. Now going forward, where we see S&P 500 happening with SMCI finally giving their 10K report, this here is positive for Nvidia to do well on earnings. Now with Nvidia being said here, you have to see Nvidia really break through above this 140 zone to start moving. Now based on today's close here, above 140 implies a 10% move. Okay, if you look at Nvidia calls right now, the 140 calls are going for around $2. So in order for you to make money, you would have to hit this level 2 bullish inflection point. That's the break-even zone for Nvidia. Okay, if Nvidia hits 148, which is assuming my estimated top here on the stock, that is implying a 17% move based on yesterday's close. Now here's the details here. So Nvidia, one thing no one's talking about is that basically Nvidia sold their large stake that they had in ARM, Sound, and Serve, many different other stocks that they have. So this is likely to cause a major EPS beat, and that can trigger a possible runoff. They have to beat earnings by 4 billion in order for this to really start going. So that's very important tell here. So that's where we're kind of bullish. Heading into on Wednesday, we got low earnings. We got Nvidia, Snow's, AI, and we already mentioned Snow earnings. It's gonna be a high impact event. SMCI will be impacted by this as well. SMCI will also be impacted by the Dell situation as well. So very important to know going forward. So I hope you guys enjoyed this market update here. So far with the market being bearish, I will share my prediction as we close off in the end of the day. I think based off of today's move here, I think even though that SMCI managed to do very well, I'm still leaning more to the bearish side because of SPX hitting my level 2 bearish, breaking below level 3, and I think we may retest at 5,900 and a potentially bottom at around 58.85. If you look at my SPY analysis here, that's equivalent to 587 on SPY. So very important. Besides that, guys, on SPX, I do give a lot of SPY plays in the free Discord and all that stuff, and they all hit. We gave 2 SPY plays that literally both calls and puts that hit perfectly, and the team banked here. Okay, so thanks for tuning in, and we'll see you guys in the next one. And like always, let's get that money.